Are you wondering about the process of syndicating multifamily real estate? What has to happen? In what order? And does the order even really matter? Well, in this video, I'm going to walk you through the entire process of syndicating multifamily real estate. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 12-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about the process of syndicating a multifamily real estate deal. And today we're talking about the process from start to finish of the syndication process. But if you're curious, if you want to learn more about what syndication actually is, I'll put a link right up here to a video I did explaining everything you need to know about syndication. So let's start with step number one in the syndication process. And that is prime your investors. You don't have a deal yet, so you can't go and approach investors to fund your deal, to invest in your real estate deal, but you have to start priming them. This is calling your investors, letting them know what types of deals you're looking at right now, what's in your pipeline, what markets you're visiting, all that sort of stuff, because you want to have them warm, all the investors warmed up, so when you do have your deal under contract, you can pick up the phone, talk with them, explain everything, and they're ready to rock and roll because they're expecting you to get a deal very soon. So priming your investors, and actually I should say you're always priming your investors throughout this entire process. Speaking with your investors, generating new investor leads does not stop. This is your number one activity when you're syndicating real estate. And number two is you have your deal under contract. You've gone through the offer process. You have a deal under contract, your offer has been accepted. That's an exciting day because now what you move to is number three is due diligence. Due diligence is a very wide encompassing term. You have to make sure the rent rolls are what they say they are. You have to do inspections on the property. You'll have your inspection team go through every single unit, check it out, make sure everything's in working order. There are no units that are offline. Sometimes with a larger property, you might have a unit that isn't really functional anymore. Maybe it was used as a storeroom and it was advertised as a functioning unit. And if something does come up, you have to address that with the seller. Maybe the seller advertised that it was a brand new roof, 2 years old, and then you really find out that it has to be replaced and it was an ancient roof. So sometimes these things pop up and you just have to deal with it and straighten everything out because then you're going to firm up. So after you complete your due diligence, you firm up the deal, your money goes hard, which means your deposit is no longer returnable and you are locked into the deal. This is when the fun starts. Now, all these investors that we were priming at the very beginning, they're all expecting you to have a deal. Well, now you have a bona fide deal. You have a deal and now you have to fund it. So you start with your marketing packages. So you're going to be preparing all your marketing materials for the property. You may have a website for the property. You'll have your one-pager that you can send out to people. You'll have your marketing package you can send out with all the relevant details for that investment opportunity. You'll be doing Zoom calls with investors. You'll be doing conference calls with potential investors. You'll be meeting with other people. This is your really busy time because now you are fundraising that deal. You are raising the capital and getting all the money in. You are getting the word out to every possible investor out there that you have a deal. This is what you like about it. These are the opportunities you see. These are the expected returns. And this is why they should invest in your deal. After you've started the marketing campaign and you have interest in your deal, now you have to start getting commitments from investors. So we are number 5. So commitments. These are going to be soft commitments because they're not actually wiring any money at this point. But the conversation would go something like this. Mr. and Mrs. Investor, you seem very interested in this deal. How much money would you be interested in investing in this deal? And they'll give you a number, let's say $100,000. And then can I write you down? Can I pencil you in for $100,000? Yes, go ahead. So these are what we call soft commitments. You're having investors commit to investing, but there's nothing signed yet. There's nothing on paper. This is important because it allows you to gauge how much money you are raising, and you always want to oversubscribe your deal. You always have to raise more money than you think you need because investors will back out. things will change in their life. Maybe somebody has another investment opportunity. Maybe somebody needs to move some money around somewhere else. Life events happen, so you always want to oversubscribe. But getting your commitments and marketing go hand in hand. Without a strong marketing campaign, you won't get the commitments. So you really have to double down and make sure your marketing is top notch. Once you have your soft commitments, now it's time to start drafting what's called your PPM. This is called a private placement memorandum or an offering memorandum. This is a very extensive document that outlines everything about the investment opportunity, and this will be sent out to all of your investors who committed to you because they'll have their lawyer review it, they'll review it themselves, and this has everything you need to know about your specific investment opportunity. Once the investors have signed the documentation, it's time to fund the deal. And this is usually done via wire transfer. So the investor will sign all the documentation they need once their lawyers, accountants have reviewed everything, and then they will actually wire the funds into the entity's bank account. And this will allow the entity to go ahead and close on the deal. And that is number 8. And the final step, it's closing day. It's a day of celebration, but it's also time to put on your hard hat. And it's time to implement your business plan and go to work, push those rents, improve the property, and really earn a return for your investors. One of the most common questions I get is, well, how long does it take for all of this stuff to happen? Well, it's a deal-by-deal basis because every deal is unique. Sometimes you may have a month and a half from offer date to closing date. Sometimes you may have 3 months. It really depends on the seller's situation, your situation, and what you negotiate. So that is the syndication process in a nutshell. I've kept things simple with 8 steps, but this is what you need to do to syndicate a real estate deal. So if you're interested in learning more about the deals I'm currently doing, head on over to callseth.com and set up a quick 20-minute phone call with me. And if you like this video, if you found this useful, hit the like button, subscribe, leave a comment, let me know what you think. And until next time, happy investing.